Hello dear traders, Roy Cousins here with our market analytics, our weekly program partnered with Light Forex Broker, and today I want to go back to Wall Street, right? I want to follow up on a session we had about a month and a half ago. The title was S&P 500 closing in on price target. So I want to go and check up what happened ever since. But also, I would like actually today to focus on the Dow Jones, right? So I'm going to follow up on the S&P 500, and then we're strictly going to go to deeply analyze the Dow Jones, and I'm going to share with you, my trading activities with regards to that. Also, of course, my conviction from this point on. It's going to be super interesting. So let's go ahead and dive in. All right, so here's the good news, guys. We've just hit, I'm talking 2-3 weeks ago, we've hit our price target, like my primary price target, 27.95. And for those of you who are not following us enough, please go ahead and check out that session we had about a month ago, a little over a month ago. Title was S&P 500 closing in on price target. So we just hit that 27.95. I'm really excited about that because when we hit that level, that was 2 weeks ago, I got out. It was a very successful bullish campaign, but I did specifically say that the 27.95 is going to be my final destination, even though I believe the price will continue to drill higher, right? So basically that's what our main theme of today. The fact that I'm still holding a bullish conviction, even though I'm not currently involved, with a position on the S&P 500 or the Dow Jones, because this is the last stretch, right? So, and I also mentioned it in the previous session we had on the S&P 500. I said everything above 27.95 is kind of the risky range of that move, right? I mean, everything from 24.48 and up was the safe move, right? When price was beginning to turn around, especially, we were able to filter out that violation we saw here on the downside with the weekly bar, right? So eventually we saw that price was spiking that bottom, last line of support and starting to turn around. Now I'm going to go back again to the weekly chart. Basically when price was landing here with that spike and bouncing back up, that was kind of the confirmation that we are indeed about to begin an upside move. Now look, this is the long-term cycle. That's why I call it the long-term cycle. The long-term cycle, as far as I'm concerned, is trading sideways, right? I mean, ever since the beginning of 2018, pretty much, right? More than a year now, price had shifted from an upside trend to a sideways movement, and we're talking about the long-term cycle. So every single leg in this trading range, right? And you can see that we have we have the first, second, third, and we've just conquered the fourth leg, right? So every single leg here is effectively the midterm cycle, the medium-term cycle, right? So right now we are in an upside trend with regards to the middle-term cycle, right? The medium-term cycle, sorry. So I don't think that move had ended. Now here's the bottom line of what I'm trying to say. Even though we've reached the 27.95 here, and we're getting into that sketchy part, right, the last stretch, right, because the safe move was from 24.48 to 26.12. Then when we conquered that key level, we had another safe move, relatively safe, to 27.95. From this point on, it's more dangerous because price can actually go all the way back to the lower section again. Right? Now you can actually see something quite interesting. You can see that last week, even though it based itself above 27.95, right? And even take a look. Let me zoom in here. It's quite interesting. So a couple of weeks ago, I'm talking price was actually challenging that 27.95 from above, spiking it, right, and bouncing back up. So that was actually a good sign, as if price was trying to say, I'm acknowledging the 27.95, and now that I've broken it, it's going to become an important support. So at first it did look like it's going to be an important support, but then, boom, price crashed it. And we're talking about last week, right? Just closed below the 27.95. But I got to tell you, it doesn't mean too much. I actually think it could easily go back, cross back the 27.95 and continue, to hammer. Now you can see that it's battling that key level right now as we speak, this time from below. So this is why it's a bit dangerous, because it could find it to be a formidable resistance, and then of course continue to drop. Now I do like I said, I do believe that it will manage to break through and continue to move upwards. And I say this mostly because of what I see in the Dow Jones, and it's a bit different. I mean, it's almost completely similar when it comes to the technical picture, but one element is different, and I think it could give us an important indication, with what's to come. All right. So I'm going to take you again to the monthly chart. I want to show you something quite interesting here. You can see this is still the this is still the S&P 500, right? So you can see that move from the bottom, right, the last line of support 24.48. Straight to the mid-high key level 27.85. You can see it's spiking it once. That was last month, right, February. And this month, you can actually see that it's already spiking it, trying to say this is a serious resistance, right? Now, the month obviously is far from ending. So it may actually, by the end of the month, manage to close above. But right now, it's definitely giving a lot of respect to that 27.95. Now bear in mind, the last low we had here on the bottom, right? It took the previous low by a huge margin, right? Mostly price-wise. It went very deep. So usually when that happens, we see a counter move that does the same thing, grabs the previous high. Right, so that's just a little anecdote, right? It's just to have you, in terms of statistics, I would say that in 70% of cases, that's what you'll see. Now, having said that, we can see that there's difficulty here breaking that 27.95, and usually that's not a good sign, right? It's not a good sign. However, like I said, I'm going to take you now to the Dow Jones. There I find very interesting leading step here that I think can say a lot. So obviously we have pretty much the same behavior, right? The same price behavior. Also, ever since the beginning of 2018, January 2018, it started trading sideways, very similar to the S&P 500, no surprise. But what also so similar is the actual trading range, right? I mean, the very specific legs and the way the formation had developed. Here we didn't have that, overshooting on the downside like we had with the S&P. Here, the Dow Jones actually fully respected the bottom key level 222.62. You remember that key level? We talked about that key level a lot. Right? And then we saw the turnaround, and we were heavily involved in a bullish position, which was also very successful here as well on the Dow Jones, taking a move all the way to 25.855. That was our primary price target, and it also got hit. But as I've showed you a couple of minutes ago on the S&P 500, on the monthly bar, all right, on the monthly close, we can see that price just couldn't break above the mid-high key level. Let me show you again, right? Talking about 27.85, we can see it couldn't break through, even though it tried twice, right? But here, let me take you to the monthly chart. It's a bit different, and this is why I think this is can give us a little bit of window to the future, so to speak, kind of give us, you know, an extra indication. Because here there is a clear close, right? We're talking last month, guys. There's a clear close above that mid-high key level that acts as, you know, as a very important resistance, should be. So we can see the close. Let's take a look at the close here. I'll just move myself to the left corner. Take a look at the close on the downside of the on the bottom corner of your screen, 25,927, right? 25,927. So obviously we closed above 25,855 here. It's a long number here on the Dow Jones, always funny. But the fact of the matter is that close can tell us that price had overcome that obstacle, and it will continue to move, you know, north, basically. It continue to move upwards, and obviously we expect the S&P 500 to follow suit, right? They should be perfectly in line. That's usually the case with both of them. Now, we can already see that this month had started pretty roughly on the downside, right? It started on the downside, and it drilled lower and lower and lower till it reached 25,215, right? And then look at this now. Price seems to be bouncing back up. Don't forget, we still have quite a lot of time till the end of the month, but my guess is going to be that price will cover all that distance, which is right now it's like nothing to cover. Actually, I think it is more likely to end up positive, and maybe even by the end of the month take my final destination here, guys. Take a look at this number here, 26,753, right? 26,753. Now that's actually not even the, you know, the previous high, although you could aim just at the previous high. Simple as that. You can look at the highest high here, 26,953. I think you can easily aim at 26,950. But in this case, what I did when I saw that break, right, by the end of the month, last month, breaking the 25,855 here, I thought to myself, that's an interesting indication that price will probably continue to take the previous high, because just as with the case on the S&P 500, here we also had the last low taking that previous low by a pretty significant margin, right? So I feel it's going to do the same. But let me show you exactly what I did when I determined that final destination, and a very important key level is right here at 26,753. What I did was I was looking for the you know, the obvious previous opposite move. Right? That's always what I'm looking for, trying to gauge a potential target by using a very specific technique, the Fibonacci projection analysis. So what you always want to look for is the last opposite move, the previous opposite move, but the obvious one, the most obvious one. So if I take the previous downside trend and I'm going to try to break it, then I think what we're looking at is mostly one segment here, right? A second segment right here, and I'm talking about downside segments right now because that's what we're looking for, and a third segment straight from this point all the way down, right? As you know, as one unit. We can't really see any significant corrections along the way, so I look at it as one unit, right? One complete segment, and that's what you want to measure. So what I did was I took you know, a simple 1.236 Fibonacci projection, the first important projection level. I always focus on that one because it's the first, right? It's the safest one. And I just applied it from the top to the bottom like this, and this is where the 1.236 sits, just a little bit below the previous high, right? Previous highest high. So yeah, so that's the situation. Now obviously, like I said at the beginning, in this case, usually, you know, I like to put my money where my mouth is, right? But in this case, I'm doing this mostly for fun. I'm not going to participate in this conviction physically. My plan was to go all the way to the mid-high key level. It's usually the plan, and that's it. Because the last stretch is usually, like I said, risky, right? That's the sketchy part. It's hard to say how deep price will go into the higher section before the next reversal will come and the next downside leg would begin to construct itself. But I do think price will continue on the upside, which is why I keep my bullish conviction, guys, all right? Now, one last reservation before we wrap this up. It is very important, and this is why I'm focusing right now on the Dow Jones, because it gives us that lead that we don't have on the S&P 500. Here we can actually see how price did break that 25,855, and now it's closing in, right? It's closing in, starting to lift that suspicious spike that I think will end up with a with a pretty nice spike here, and price will actually close above and shift direction. So what I'm trying to say here is, if we'll see in the next couple of days, right, maybe up to a week, that price was already covering the distance and is basing itself above, then I think you will know with relatively high confidence that my conviction is right, and price will continue and push forward till it hits the 26,753 here, 1.236 Fibonacci projection level, and possibly later on the previous high, and maybe, just maybe, even go all the way and touch base on the top resistance and key level at 27,550. So yeah, there you go. Now, if I had to, if I had to place a position at this point, I would place my stop loss level at 24,620. But at this point, like I said, I prefer to sit on the sideline, watch price, probably go all the way to that destination. But later on, possibly play out another downside leg, right? That's what we're looking for. The ideal scenario, as far as I'm concerned, right now I'm preparing for, for shorting, Wall Street. It's just not the right timing, but we should be preparing that from a mental point of view. So once price takes that previous high, hopefully, and begin to turn around, that's going to be the moment I'm going to pull the trigger on a bearish position. So just saying. That's about that for today, guys. I hope you enjoyed that session. Hopefully I will also be able to come back and follow up on Wall Street probably in a month's time from now. We'll see how things played out. It's going to be really fascinating to see how things are going to unfold here. And so yeah, I'll be here to keep you posted. In the meantime, guys, have a great trading day, and we'll see you next time.